Good morning, good afternoon, good night. Welcome back to another schema scalper video. In today's video, we're going to be looking at Friday's trading, Friday the 9th of February's trading. We're looking at GBPUSD on a 50-minute chart, and we'll go down to a 5-minute. Okay. So before we even look at the Friday's trading, I was expecting these highs to hold and not get traded to. And I was expecting this lows to get traded to on Friday, but it not going into this Monday low. That is what my expectation for Friday was, even before the day opened. What we did get was, okay, I'm just gonna unmark that out. Just gonna extend it back. Mark out day open. Now I'm checking which range projection we're going to use. So the 4 p.m. to 8 p.m. Oh, it's consolidating, and the 8 p.m. to midnight was consolidating. So I'll just use both. Highest high to lowest low. Usually I'd use the 4 p.m. to 8 p.m. but this range just looks too small. Let's actually check the range size. Highest high, lowest low, 8.5 pips. Yeah, the range is too small, so I'm using the whole 4 p.m. to midnight range. One. Okay. Now I'm marking out time. 2 till 5. And then 7 till 9. And then 10 till 12 midday. Extending these levels into the time that it hit the levels. What's above the open we're using as selling points. What's below the open we're using as buying points. So now we've got the chart marked up. Obviously this is not in real time, it's currently the weekend, but this is still super interesting. Go into a 5-minute chart. Now we're looking for those points when they hit during the sessions. Hits a 0.5 during London session. We're expecting this to be a point of reversal for the high of the day. Pardon me. You don't see a fair value gap inside here, so you ignore. Make it X. You ignore this level. Didn't make a fair value gap. You ignore it. Price traded higher than this high, the swing high. Now you look at the next level. Price goes up into it, makes a swing high, comes back down, creates a fair value gap. And then price returns back into it. Right in there. So you could take a short there. That's the high. You don't always have to wait for the high. You can enter at the low. I usually wait for the high. Stop 3 points above. Target below day open and one of these levels. So 1.5 or 2. Whichever one hits during the time. So it gets to 1.2, but that's outside the London session, so we're not considering closing the trade. Sorry, 1.5, and then it gets to 2 in New York session. Boom, gets to 2 in New York session, but reverses. So it creates a fair value gap. It gets to 2, creates a fair value gap, then goes back into the range of that fair value gap. To make it more clear, let's use yellow, dark yellow. Let's do the same one with this. Yellow, 60%. So that's the first fair value gap made. Doesn't stop you out. Goes back in, and once that candle closes, you should close this sell trade. Or move it to break even. Choice is up to you. You can see it goes back below day open, allowing you to buy this fair value gap. So if you took this long position, stop is 3 points below the low, 63. Target would be above these highs because this was already tapped. So to now be 0.5, oh sorry, 1.5 and 2. and it hits it during the time that we're expecting the 1.5 level to be hit. And then creates a fair value gap down, trades back into it. Trades to the level, creates a swing high, goes lower, creates a fair value gap. All this is above the open during the time we're expecting these things to happen, and you could take a sell position inside here. Stop 3 points above the swing high, so it's 10.6, 10.7 is fine. And now you're going to be targeting, since it's the end of the day, you're going to be targeting day open and moving the stop back to break even. So you have a risk-free trade with 1%, 1.5%. Here you have either your stop loss for break even or 0.5%. And then here you'd be in an open position with 0.5% in profit right now. So if you guys found this video insightful or confusing, leave a comment down below. Yeah, cheers.